Welcome to Advisor Talk with Frank LaRosa. Brought to you by Elite Consulting Partners, it's the only podcast offering unfiltered guidance and direct advice for all things concerning financial advisors, RIAs, and the practitioners in the wealth management business. Learn more and subscribe today at eliteconsultingpartners.com/podcast. And now, here's your host, Frank LaRosa.
Hey, everybody. Welcome to Advisor Talk with Frank LaRosa. I am your host, of course, Frank LaRosa. I'm the owner of Elite Consulting Partners as well. And today, we're going to do our third episode of a three-part series on growing your practice. And I have Jon Randall on, who's the owner of eXtraordinary Financial Advisors Coaching Company. Jon, welcome to the show again.
Thanks, Frank. Awesome to be back for round 3. Lots of great stuff to get into. Let's go for it.
Yeah. So for those of you who watched our show on YouTube, which is Advisor Talk with Frank LaRosa on YouTube, I decided to go without my jacket on this episode because we're going to get into the nitty gritty. We're going to roll our sleeves up and get into some tactical things. So for the first 2 episodes, Jon, right, to catch our listeners up, first episode was identifying your growth problems, right? What are the gaps in your growth? The second one is sort of coming up with the solutions. And we talked a lot about segmentation, really basically client segmentation to increase your service level to your better clients. 80-20 rule, right? Spend more time with the folks that are generating 80% of your revenue. It's 20% of your clients. So now imagine we've gotten our client over the hump of the anxiety of maybe getting rid of some clients, maybe having account minimums. And so they say to you, Jon, I listened to what you said, and I segmented my book of business, and I even got rid of some clients that aren't revenue generating, and they take up service models. Now I'm losing sleep at night because I don't know what I'm going to do now to turn those remaining clients into more revenue. So let's just get into the weeds and talk about what are the things that you are working on with your clients, because you have clients all over the country, and to help them they listen to you and they're trusting you. Now, what are the real tactical growth strategies that you're recommending to help them grow that revenue?
Yeah. So as we go from this, leap of letting go of smaller clients, doing more for top clients, that's really the secret to the fastest growing people. They're doing this. And so people ask, well, how do I do more with my top clients? What should I do? And I can't tell you how many times we hear, well, I've done everything that I can do with my clients. I'm special. So I have yet.
How about this one? I have all my clients' money.
Right. Yeah. Everything. Yeah. I have yet to come across the practice that has captured every client opportunity. Maybe you listening are the first one in the industry, but it's highly unlikely. So we're going to talk about what you can do to capture more business with clients, which can in turn lead to capturing new clients organically. And once you're really good at what we've talked about in capacity with the client experience in the last second podcast to this one, how to grow with existing people. Once you're awesome at these, you are in the greatest place to recruit other advisors and to acquire other businesses. And you're more profitable. You have better things going on that other advisors will want to be part of. People will want to sell to you because you have all this great stuff going on. So there's a lot of, exponential great factors here. But at the end of the day, it's about more revenue, more profits for your firm. And so we'll dive into the tactics here, how to do it.
Yeah, let's go. So what's the first one?
So doing more with clients in this segment. Most of the revenue for most of financial advisors comes from investments. So as you think of investments, we're on an interesting, trend here in our industry where, everyone's heard of price compression is existing. And look, a lot of that has been driven by, a robo-advisor that came out a lot of years ago, right? There's a lot more automation. There's a lot more, less humans involved to manage money. And really, at the end of the day, even though it is so much revenue, it really shouldn't take that much time. If you're out there and you have some special investment model and you spend a lot of time on it, that's not really our business. Our business is relationship management. It's working with individuals. It's cultivating that that relationship, the client experience. That's what keeps people around. That's what drives revenue. But it's a big revenue source, the investments. So any professional service, if you think about a weight scale, has price and value on a weight scale. So if the value you're delivering is so heavy that a lot of people won't worry about the price. So even though in our industry, there's been price compression with investment management, a lot of the real, full service advisors that actually, do a great job for clients, they haven't seen a lot of attrition. There's a great Michael Kitz's podcast about a year ago that talked about this, that, the typical, full service advisor that's really doing what we talked about last episode, they are not seeing a decline. So I would just think about, is there a way to really look at your offering? And you could have your standard offering, but you could also have an enhanced offering that has more value that people might want to pay for. So I'm not talking about going back to clients and just saying, we're just going to raise fees to raise fees. That's like going to the grocery store and you're used to milk being $3 and all of a sudden it's $7. That stinks. That does not feel good. But if you went to the grocery store and there was that $3 milk and right beside it was a special $7 milk that made you better looking, helped you live longer, some people might opt for that different milk. So same kind of thing. You can still get the old milk. It's just fine. Or you might want this enhanced milk here. So there are ways with your services to kind of evaluate what your offering is, and is there an enhanced offering that your clients might opt for?
Actually, just funny you say that. We just, part of our service model is, when we move an advisor independent, we can work on we run all their payroll and all their benefits. We can help them with all those things. And we actually just went through this exact process because we were doing things for clients on the payroll side. And we ended up sort of doing things that really they weren't part of that program, like weren't part of running payroll. It was sort of HR related kind of stuff. And we went through an exercise and we said, hey, listen, we're still going to give you, payroll. And we're still going to do all the things we promised we're going to give you. But for these other services that you seem to have interest in, we're either going to have to charge you a la carte, which you don't want to do, right? Or we're going to charge you, which is called basically an enhanced payroll service program, which is great and will service you and you'll be happy. It's just a little bit more money, or you can just stay the way you are and do what you're doing today, and that's great. And any of these other things that you want, you can go to Paychex directly because they have access to the Paychex system. You can go directly, or you can get a higher level of service and come through us. And they all basically opted for the higher. The enhanced payroll fee. So
it's amazing how many people, will upgrade if given the option. So I think a lot of times advisors just don't provide the option for something else. It's just the same old thing and clients don't realize that there's more. So
LPL did a survey, and I don't know the exact numbers, but I was at a conference with them a year and a half ago, and they did a survey of the top producers at their firm. And the top producers at their firm raise their fees every 2 years.
But that
raise their fees.
It's great for listeners. When's the last time you raise fees? I hear a lot of times like it's over 10 years or 15 years.
Right,
it's a lot of times.
And you do that, and the clients are like, "Oh, I thought you would." I was wondering when you were gonna, increase your fee. Everybody, I agree. Yes. Oh yeah, I increased. You talk to a business owner, they're like, "Yeah, I've been increasing fees on my clients for years. I was wondering when you were gonna do it." Like,
it's such a scary thing. And so the first thing advisors say is, well, I could do this with new clients, but I could never do this with my existing clients. But every single one that doesn't, we've led tons of practices through this transition. And again, it's not about charging more. It's just giving people the option for, the better milk, an enhancement, an upgrade. Every time the clients say, well, it's about time. We've been wondering when you were going to do this. So it's a great growth option. You said the big one earlier, Frank, that, I have all my clients' assets. I can guarantee you don't. They hide accounts. They have little stuff on the side. They do. And so to dig for those can help. This is a neat time for the first time, and I don't even know how long. We actually have interest rates. And it's not too hard to capture assets from a bank and put them in something that's actually earning interest. It's astounding the amount of assets that, good clients that are savers that don't spend anything. They have hundreds of thousands just sitting around. And it's neat to see advisors capture millions in those assets that, look, once they come to your firm, they're not going to say, hey, can I have that money back and sit in my checking account? Even if it's going in a CD or money market or something with you, eventually it's probably going to get in your wrap accounts. Are probably going to get into something that helps them grow and produces revenue for your firm too. That's the mutual win we're looking for.
Yeah, one of the things that and again, especially we talked about this on the last episode, when I work with a client and have them transition to a new firm, I go through not only what are you going to tell your clients about why you moved, right? But I also coach them on what to tell your clients to attract new assets. Again, to quote another stat from LPL, it just happens to be I had those stats in my head, but I've seen it over and over and over again over the years. They are at 106%. And the average advisor that moves to LPL after 6 months is at 106%. 106% more assets than when they first got to the firm, right?
Pretty
and
incredible.
it's really about coaching. I experienced that myself when I moved my own practice years ago, many of our clients, because if you position things the right way, you're telling your clients why you're doing it, enhanced services, all these other things. And oh, by the way, John, I know you had that Merrill account or that whatever account, while we're going through this process, why don't we just roll that in? Because of, it's cleaner, it's uniform. You haven't been happy with that person anyway. He hasn't called you in 6 months. And with our system, you get a call every whatever, like you can go through the system that the Supernova system, you have those conversations. And then sometimes, which is the hard conversation, tell a client they're not necessarily, like, hey, there's no seat on the bus for you.
Yeah.
At the level that you're currently at, unless you want to bring over these assets or those assets, because we're enhancing our service model to our existing clients, and we have a $500,000 minimum or $1 million minimum. And in order for you to meet that standard, which we'd love to have you as a client, but if you bring over that $500,000 Morgan Stanley account, that will fit into our service model. We'd love to have you. So why don't we roll that in? I think that terrifies advisors when they.
It does, but it's you look at just the levels of satisfaction. I mean, clients, like getting contact, like you talked about last one. They like getting advice from you, but they also like you helping them implement stuff. That's the highest level of satisfaction. So if you capture these assets, think about it, they're probably better off with you. A lot of advisors, like we talked about before, they don't have much of a service system. They're not getting a lot from their advisor. If you're listening to this and you're getting better, you're probably doing more than other advisors out there. So these clients are better off if the assets are here under your watch and your team's watch. And then, so yes, getting more assets in is massive, but then getting them in a place where clients are better off and your firm generates revenue. Sitting in an old brokerage account, an old mutual funds collecting dust, probably not the best place. Actively managed wrap accounts, probably a better place. Clients are going to perform better over time, even with paying a fee, right? Right. There's a benefit to paying that fee. There's a better return on the investment historically for people that are in actively managed portfolios.
Yeah, the other thing that I always recommend, I use the term lead with lending. If you're at a firm, you have to be at a firm that has the capacity to do that. But lead with lending. If you go to especially under this sort of conversation, you're spending more time with your better clients. Your better clients are probably more than likely business owners that are trying to do other things and looking for low interest capital to go out and invest and do other things. And if you go to them with opportunities, you will bring in more assets because they'll want to they'll want to use those assets to get a better rate on their loans. I've always found that as a director, a tremendous way to attract new assets by offering them something. You're offering them a lower interest rate loan or competitive rate loan than the competition. And I think there's a huge misnomer that just because someone has $50 million or $100 million, they don't need to borrow money. those are the ones that borrow the most money because they know what they can return on that money. So, when I'm looking at the areas that you can do business with a client, right? You talk about investments, financial planning, insurance, lending is a huge one.
It is.
What about like so doing more business with those clients is great. How do you then go out and attract new clients? So the second component of this thing is really attracting new clients, right? How do you go about that? Because that's also something that advisors are, I don't know, afraid of, like asking for referrals.
Yeah, well, it's remember that we talked about in a previous episode, if you're doing such a fantastic job with people that they are going to tell others about it, they will come. That is a growth strategy. So when people say, I want to grow, I need new people, I always go back and look at, well, what are you doing with the existing people? Because they are the quickest path to others just like them. The number one way advisors are attracting clients is through referrals. Just is. The clients you're working with know your value more than anyone else. So they have already interpreted, they've already experienced it, they can talk about it to somebody else. And most affluent people in the industry are meeting their advisor through some kind of introduction. Number one, through a client. Number two, through a professional like a CPA or attorney. So it's really simple, but it doesn't have to be just, ask all the time. Yes, we teach some comfortable ways to position it and bring it up to really just keep people's radar on to help others just like them. But really just targeting and maybe finding a niche is kind of the next level. So even if you have one client that, gosh, they work at this place, they're a really good client, there might be other people like them, or they own this type of business. There might be other people like them that own these other businesses. That is target marketing. That's really where you can take referrals to another level. So let's say, I'm just making this one up. So let's say somebody, a really good client you have owns a car dealership. Well, there's other people that own car dealerships. Sometimes car dealers get together and they talk about the business, they share ideas, or they go to a conference. So to get access to other people like that, it's a smaller pond to fish in, and it's easier to get to the next fish. It's easier to get to that next person. It's also easier to get known. So you can position yourself that, hey, I'm an expert in dealing with car dealership owners. Even if you fake it till you make it, still, though, it's a much easier pond to fish in. And if the person has their radar on that, hey, you specialize in people like them, it's going to be easier to find the next one. But maybe you go to one of their conferences with them. Maybe you do something for some of those people. So leveraging your people that you really want to duplicate to find others like them, it makes the path a little bit easier. So you're not trying to attract anyone. You're not trying to get referrals from every single client. It's maybe 1, 2, maybe 3 clients that you have that have access to others like them that you're trying to duplicate or get access to. It makes this path a lot easier. Now you're just putting effort into a small number of people to try and, duplicate or get access to or do something fun with, and they might bring one of those people along. It's a much, much easier task. So it takes the dauntingness out of trying to attract new people, and it actually makes it kind of easy.
Right. Where do you find this sort of new age? Where do you find social media and branding fitting into this particular bucket of attracting new clients, right? What's your take on it?
Well, it's becoming more and more, right? Especially in the last few years. I'd say it's an influencer. People definitely check you out, right? They might look you up on whatever, Facebook, your website, those kind of things. You hear these one-off cases of someone just randomly Googled me and checked out my website and they found me. Now they're a client. But most of the time, it's they hear about you and those things are supporting. So they're kind of like perfect surround sound that, hey, I heard about this person. Let me check out their website. Let me check out their, Facebook or social media that they're into. Hey, they're into something I am, or hey, we have mutual friends. Oh my goodness. It's sort of a tipping point that makes it a little bit easier if you're out there. They can kind of get to know you a little bit, and it takes any discomfort out of meeting somebody new. So it's not, but on its own, it's not huge, but it's a huge amplifier to some of these other methods. It makes it much easier for, people to come in. So
yeah, we're seeing, one of the other business lines we have is chief, really just fractional CMO services. and we're working with some Ameriprise folks and working with some LPLs and Raymond James, and we're helping them build their brands. And what we're trying to get them to understand is like, hey, listen, we're going to do your social media, Instagram, all that, and like the phone's not going to just start ringing, right? Like it's a long term, it's a branding thing. It's getting them to understand who you are as an individual, because when you meet somebody at a park or at a restaurant and you give them your card, what they're really doing is they're going to go online and they're going to see what you're all about. So it's like supporting documents. They want to see, they assume you're a financial advisor at any number of those firms. So you're smart, right? Because you're smart, you're at that firm, right? But what they're really looking for is, do they like you, right? Is there some commonality? So if you're in the car dealership, the car dealer owner example, you better have like your website better be focused on that, have something that resonates within that world. Your social media, you better be posting stuff, like talking about that industry and floor planning and whatever it is. Like floor planning is a thing that they deal with car loan lending and all the cars on the lots, right? So like you need to be talking about that stuff. So when somebody else, when two car dealer owners are sitting together and they say, oh yeah, my guy is really great. He's at, wherever, Ameriprise or LPL or it doesn't matter, Morgan Stanley. Well, maybe not because they don't have as much social media, but that person's going to go, oh, let me check him out, her out. Your social media better be locked in. So
yes. And I like this, speaking to your target, speaking to your niche, right? I mean, there should be content there on your website and your social media that speaks to those people. So
that separates you from everybody else.
It does, because it's a wide sea of advisors. There's so many out there, and no one's really sure what everyone does. And it's hard to be known, but to focus more on these people, it's so much easier, and everything follows suit, right? Your website should be this way, your social media should be this way too. And look, it's getting better with compliance. I mean, compliance has embraced look that this is the way of the future. So whether you're RA doing your own, or you're one of the great independent firms that you mentioned, Frank, it's evolving what you can put out there. And sure, there's approvals and things like that, but you can really tailor and really be viewed as, wow, this person is for me. They're striking a chord with exactly me and your target. Right. And it's kind of the next level of this.
They're family oriented. They're outdoors people. They're whatever the niches are. Yeah. Because your clients tend to be like you, right? So why not put you out on social media so that people can see you? So that gets into the third component of sort of growing, because I think this is something with branding and social media and M&A activity, which is something that you've been really good at. I think that people don't understand the importance of that also. So talk a little bit about your merger and acquisition experience as it relates to tactical growth strategies, right? Because this isn't really about an individual client. It's about a bunch of clients that come with one advisor, right? But you can't do that and spend the time on it if you're not segmenting and have the time as the visionary to do that. So just talk for a little bit about the M&A side of this thing.
It's kind of the same fundamentals of doing more with clients, attracting more. So if your business is advisors now, it's, hey, we do a lot with advisors. We recruited this person in, we help them grow. They got a great track record. Or, hey, we acquired this person and, we grew it. It really is the same thing, but then, getting referrals to those people. What's your target? Are you looking for people from a certain firm, from a certain office that's down the road you're trying to get known with? It's easier to get known there. Maybe a wholesaler or someone in an industry can introduce you, and maybe it just happened to be at a lunch together kind of thing. So you can get access to people easier if you have a narrow window. You're right. You're supporting sounds of website and social media should really speak to those people. So if you're like, John Cutton hadn't been in a client meeting for 12 years, he's in a whole nother level of the business as an entrepreneur, but he is actively seeking acquisitions and other advisors to add to his firm. That's his game now, and he's kind of known for that. So to give away value there and to really target this certain advisors you're trying to work with, it's the same formula. And it's so neat how, a lot of you listening have probably gotten really good at the financial advisor business and just take what worked there and applied it. Now, what I find is a lot of people they don't have as much experience acquiring M&A, kind of things with other advisors that they did in their business, but they learned a lot of great fundamentals. So we just need to transfer what they learned in the advisor business to acquire, business and really grow, do a good job with it. It's applying it there for mergers and acquisitions and getting really good at those basic tactics, the fundamentals that are really going to track the deals and help you win over somebody else. Because you're always in a beauty contest. If you're recruiting or buying, you can guarantee they're talking to somebody else too, but you can win them over by some of these fundamentals.
Right. Now, you say that you have to be ready, right? Must be ready. So when you say be ready, what do you mean by be ready?
I'd say all the facets we've talked about in this series. Capacity, you've got advisors that can handle the clients. You have a great client experience that can care for the clients that are coming to your firm, and you're creating a lot of value for them, right? You're doing a lot of things for them. You're doing financial planning, and the results of getting referrals from these people is proof that this stuff is working. So really, each of the things we talk about in these last 3 series, if you have done all of these, you've worked on capacity, you've worked on your client experience, you've worked on how to grow, create a better experience, do more with clients, you are even more ready to acquire and bring in people from other firms. In the practices that work in these things, it's just easier. It's easier to get a loan if you're acquiring because you've got more profits. They're going to want to, give you loans all day long if you got a profitable business. If you're acquiring things and you grow it, they're going to want to continue to give you loans to buy that external acquisition. But those really, the things we've covered here are a lot of the fundamentals. Of course, we can go a mile deep on each of these. There's a lot of nuances in it, but to keep it simple, it's some of these basic things we discussed here that will help you attract more in M&A, more recruits, more acquisitions, and make you even better to win these deals.
Yeah. And we talked about this in the last episode in terms of, being ready. You some advisors think, well, I'll work through that when I get my first opportunity, right? When I come across the local guy that he's been seeing at the coffee shop that he knows is an advisor, and eventually he's gonna sell. I'll work through those things once he becomes an opportunity. And that's a huge mistake. What you really need to be doing is acting as if, like today, acting as if you had an opportunity right now that walked through the door. How would you present? What's your value proposition? Can you define your client segmentation strategy? Can you define what the client experience is going to be for those clients of the selling advisor who probably has had those clients for 20 or 30 years? Half of them are probably their close friends, right? Maybe not half, but a large swath of them, right?
Yeah.
And that selling advisor is going to be very concerned about how are my clients going to be taken care of. And like we talked about with your brand, and I've seen this because we work on the M&A side as well. We have that business that handles that stuff, which is partly why we got into the marketing services, right? The CMO services, because I would have a buyer and then I'd have a seller, and the seller would go to look up the buyer on social media, and their website was really old. It wasn't really well put together. There was no, sort of LinkedIn exposure or any type of other social media other than the website that was, probably 10 years old, right?
Yeah.
And so it doesn't give a seller the warm and fuzzies to feel like, they're okay having that. That's why they're getting out of the business, because they don't want to have to upgrade and do all of those things. They recognize where the industry is going and they're not interested anymore, but they want the clients to go to a firm that has all that stuff.
Yes.
And if you can't have a good website, what does your client service model look like? Right? I know it's sort of picking at things, but I've seen deals basically not even blow up, not even get started.
Yeah.
Right? Because of those little things. So, look, I think that advisor acquisition recruiting is like the holy grail now. Everyone's talking about it. Maybe other than James Gorman, who talked about recruiting is dead, which I thought was...
No, it's the sexy thing, right? Everyone wants to do it, but being ready for it, I think you said it best, Frank. It's a lot of people think they're ready, they're not, but the more ready you are, the easier it will be. You'll land more deals left and right, but a lot of it lies in these fundamentals we talked about in these last 3 series. If you're doing these things, you will be even more attractive to a recruit, a seller, they'll see it. They can tell.
Yeah, and one of the things that we never mentioned this, but the other component of it is when you're ready to sell, right? And what does your practice look like in evaluation? And we're not going to get into that on today's call, but
yes,
like that, all of these things, client segmentation, a buyer's looking at all that stuff. And the better you are with these things, the better your valuation.
Yeah. Yeah. Some of the highest multiples we've seen is the sellers really have this dialed in. They're working with very little, small number of clients. They've got all these systems and other people are handling the less work for a buyer, the higher the multiple. Makes it pretty easy that these clients are on autopilot. There's referrals coming in. The assets are growing. That's pretty attractive.
Without you as the principal of the practice. Right? Without you as the principal of the practice.
It's huge. Yeah. You saddled with too many clients and, losing assets and going backwards. It's not very attractive for a buyer.
Yeah. The other thing too, the other thing we didn't really talk about in client segmentation is we talk about a little bit about financial planning and investments. And this is sort of a warning shot to those advisors that are out there that think that they're really great portfolio managers, and maybe they are, right? But the fact that you're running all the money for your entire practice in the eyes of a buyer is not a good thing.
Yes.
You think it is, it's not a good thing because someone has to replicate what you're doing.
Yes.
And if you're not there, no one else can replicate it. And I think that advisors have gotten off that because it used to be, well, you want to run the money. This is when valuations weren't what they are today, but you want to run the money because no one can replicate what you do. Right. That was even when I was a manager, that was my thing with my advisors. Run your own money. No one can replicate it. The guy at Merrill can't copy your models. But the reality is that's flawed thinking.
It is. It's not the business you want to be in. You want to be outsourcing that. It's got to take no time. It's it's about, if you're selling, it's about what's attractive for a buyer. And if you're a buyer, look for great deals. I think sometimes I see people just like take a deal to take a deal that may not be a fit or may not be ideal. They just want to get it. But is it really great? Are you just buying a bunch of, crap that's going to clog up your system and give you all the problems we went through here?
Yeah, right.
Or you're buying something awesome.
Yeah.
There's not too many unicorns for sale out there, but pay attention to quality, culture fit. We're seeing really, really important if you're acquiring or recruiting too is really important. You want to find good fits. Don't get too excited about something that's got red flags, but so many great deals out there, massive, massive opportunity to grow this business and all the ways we discussed from within, organically, inorganically with M&A. It's awesome. I love it.
Yeah, it's a great time to be in the business. So, Jon, thanks for your time. I appreciate it. This was really, really good. If anyone wants to talk to you about hiring you as a coach to help them go through the segmentation and really sort of, 10x their business, where do they go?
The easiest is our website right here, xfa.coach, short for Extraordinary Financial Advisors. If you want to email me directly, go for it. It's Jon, Jon, @xfa.coach. We're so excited about helping advisors grow. We've got a lot of capacity, a lot of great advisors who are ex-advisors. They're either moonlighting, doing it on the side, or they've sold their practice at a young age and they just love doing this, kind of like me. So we're excited to help you go to the next level.
Awesome. And for my listeners, thanks for joining the call. Again, if you want to check us out on YouTube, Advisor Talk with Frank LaRosa, don't forget to like and subscribe. Also, share this with someone that you might think this might be helpful to that's struggling with this business right now. If you're looking to reach out to me, if you're looking to transition, or candidly, if you're just looking to get some help with your marketing strategy and you want to get in touch with our CMO team, you can email me at frank@eliteconsultingpartners.com. You can always also call me at 856-316-4651. Our website, of course, is eliteconsultingpartners.com. And Jon, thanks for this series. It was great. It was we had a lot to unpack. I would advise everybody to go back and listen to the first two. Make sure you have a notepad with you and a pen. There's lots of good content there. So, Jon, thanks a lot. I appreciate your time.
Thanks for having me on, Frank.
Thanks.
Thanks for listening to Advisor Talk with Frank LaRosa. If you're looking for more advice or solutions on any topics in the financial services industry, or you just want to subscribe to our podcast, head on over to eliteconsultingpartners.com/podcasts.